Well, I think the headline phrase I would look to is, will Brexit break the EU? Now, I'm being a bit mischievous here. I'm not saying we're going to have another existential crisis of the EU, but I think in the next 12 months, and maybe more, Brexit, the process, the negotiations will dominate the headlines. It also interweaves with a whole range of other important political events, elections in France and Germany, to name two of the really big ones. It worries me slightly because I think all of the political energy in Europe will go into Brexit and to the discussions around that. And it means that there's relatively little time, I think, for Europe's politicians to devote to the fiscal side, to reform, etc. And of course, what the ECB is doing in terms of bond buying makes it easier for politicians not to address really deep-seated reforms. Having said that, European economies are slowly beginning to recover. There is one area, I think, where politics and markets will, I think, intersect. That's Europe's banks. Many banks in Europe still have unfinished business in terms of rebuilding their balance sheets. And that's going to be an issue which will tax politicians because they have to decide who bears the loss, who makes the funding. Well, I think the area that most concerns me actually is the bond market in Europe. The ECB, I think, of the major central banks, is still engaged in QE. The Fed is now beginning to disengage. And the ECB already dominates the bond market in Europe. However, the European economy is slowly beginning to recover. And as we get through the year, people, I think, will talk about the ECB either further distorting the market or having to taper. And this, I think, combined with better growth, we'll see some of the really low bond yields in Europe begin to rise. European bond markets, compared to history, are incredibly expensive, very, very stretched. So I think that's going to be perhaps the dominant asset price story for the course of the rest of this year. And then in the equity market, I think it's going to be a trade-off between the speed of growth that we see across Europe and the risk appetite of investors to European assets. All through last year, all through 2016, international investors avoided European assets. Europe was one of the big consensus underweights. And for me, positioning is going to be the big issue coming through this year, whether appetite comes back to European equities and also whether we see a profits recovery.